Hi guys, how are you? Welcome back. Good afternoon almost. Good morning for me. All right, so what is going on in the markets, right? Well, if you remember about 2 weeks ago, everything was so boring, right? It would make a move and then kind of sit there for all day and then maybe do something the last 2 minutes of the trading day. And I said, this is going to get wild. This is going to get crazy. And that's exactly what's happened. Um, when the election came out, I also said that, watch, uh, mind what your thesis is as to why the market is going up. It's not because Trump is winning. It's not because Biden is winning. And then, well, now the market knows what's going on. Now, don't come up with cute stories. I don't like the way the market is going straight up. At some point, this is not the way markets move. At some point, it has to correct, and it has corrected. Um, so I've cleaned up the charts a little bit. I've kind of gone through everything, and obviously there's a lot of mixed messages, right, in the markets. You see the Nasdaq is down, I think, as much as 2.38 for the day. Now it's down 1.35, and the rest of the market, such as small caps and the S&P, have been positive more or less for the day. So there's a huge disconnect, and things are flying every which way. We had the news yesterday of a vaccine. Um, Again, there's so many more things than just, hey, we have a vaccine. And everybody runs out, yeah, this is great. Yeah, well, the market is straight down, right? On the NASDAQ. So why is that? Why is that? Well, you know, prior to this, we kept having the same two themes: stimulus, vaccine. Stimulus, vaccine. Stimulus, vaccine. Stimulus, vaccine. This has been going on since April. Um, you get to the point where we said, okay, we have a vaccine, 90% effectiveness, which is extraordinarily good. Okay, but that's what Pfizer says. You don't know uh, if that's true. Okay, let's assume it is. I'm sure it is, but again, you got to see the data, right? Has to get the approval. Great. So now what are they going to tell you, right? So we are at that point where anything that goes wrong from raising expectations of a vaccine to that level is going to be negative for the market, right? How about stimulus? Well, we know it's coming. It's just when is it coming, right? Uh, what are the expectations of that stimulus? Again, we get to that point where expectations are so high, okay, that anything bad or anything not as good is going to be bad for the market. Money printing. We have printed so much money. We have come up with so many lending programs, so much intervention that goes back to what I was saying a few months ago, not publicly, but to my subscribers, that, you know, even if we do keep stimulating, which we will have to, we're going to get to the point, are we in the first 50% of the stimulus or the second part of the stimulus, right? It makes a difference. So if the money doesn't come in a timely fashion and it keeps increasing, okay, uh, that's going to be viewed as not good for the markets, right? So you got all these expectations at a very high level, and the market has, I don't want to say priced it in, it's not the right wording, but that anything that doesn't jive or is not as good will tank the market, which kind of, brings us in a very awkward position because when you look at the overall um, markets, you're in a very funky kind of area. You have a double top here, okay? If this breaks, you could see a very big drop. Possible. It's not what I'm saying, but it's possible. You have the makings of a big drop. The market leaders are in a double top M pattern. And if they fail, then, you know, it's going to be ugly. Now, why is this more forward looking than in March? The difference is that it's not being pumped by anything. See, in March, you were in the first 50% of the stimulus. We're going to give you money. Don't worry about it. Bum, 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 bum. That's artificially going to pump up the market. It's not because it's a forward-looking indicator. It's just that you gave them $4 trillion. So the market is going to, they have to invest the money somewhere, right? This time around, it's not the same. If it starts to tank, you're going to do what? Stimulate more? Print more? You see what I'm saying? It's not the same thing because you're at all-time highs. I'm not saying that it can't go higher. It's not what I'm saying. I'm just telling you that the pattern right now, if you take this all off, okay, take this off, is double top M pattern. And that is a bearish setup, okay? And that's why I posted this. And that's why I've been saying we're not out of the woods, we're not out of the woods, we're not out of the woods, wait, 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 wait. In terms of short-term trading, this is a horrendously bad market. Volatilities occur at turning points. So you have big drawdowns, big pops, big drawdowns, big pops. Okay, no matter which way you trade, at some point, if you hold on long enough, you're going to be wrong. And it doesn't matter if you're a bull, a bear, a perma bull, don't matter. You're going to be wrong. So that's why we got to listen to the message of the market. Okay, you got to look at the bigger picture. You got to be aware where we are, what's going on. Don't get too bearish, too bullish, to anything. All right. Now, can we turn around here and go like this? Yep, I'm happy with that. Can we do this? Yep, I'm happy with that. So what is the most likely scenario? Well, you got a double top. The most likely scenario is this will break. The likely probabilities. Not, I'm not, there's no bias in that. It's just the way the pattern looks. Okay. The hard part has been to get the good risk reward short. And the reason for that is because the market went straight up excessively and straight down. You can't shorten the hole. It's not the way it works. So what we need, okay, what we need, somebody try to chart this. You can't chart this. This is not chartable. All right. And the reason it's not chartable is because it's a thrust move. It's a tight, tight, tight. You can't count anything in here. That's a particle market. You got to understand the difference between a particle market and a wave market. Okay, this is a particle market. This is a particle market. Okay, this is more wavy, but still, okay, particle. And that's what makes it very, very difficult. Now you can find time frames where it's wavy, no doubt about it, but this is